Hello.
Hey everyone.
Hello. Welcome to another episode of Poor Man, Rich Daughter. This is episode 3, and today we're going to talk about an investment I made and FUD. Fear, uncertainty, and death.
Run.
Fear, uncertainty, and doubt. Growing up not rich does a certain number on you in the way you think. So, in episode 2, we talked about how the silver bank crashed and that caused the market to drop huge, right? But mostly on banks. However, other sectors of the pie were affected. Like Hercules, a stock I've been watching for a little while now, probably closer to 4 months or 5 months. Ticker symbol HTGC. And today I bought a dip, and that dip is causing some FUD.
Okay, fine, I'm cool, I'm fine.
So, what is Hercules? Well, Hercules closed out at $11.95, $1.6 billion market cap, and Hercules has the 18.11 PE ratio, which we talked about before, means it's a reason to buy the stock. But why did I buy the stock?
Oh, Hercules.
What is Hercules Capital? Well, Hercules is the largest non-bank lender to venture capital-backed companies at all stages of development, but in a broadly diversified variety of technology, life science, and sustainable and renewable technology industries.
That doesn't sound good.
So what does that mean? Well, that means Hercules is a non-bank that funds technology companies, tech companies.
Heroes like Hercules.
Honey, you mean Hercules.
So when they want money, they'll go to Silverbank, or when they need more money or they need more of an interest, they would maybe go to Hercules and get money from them.
Are you always this articulate?
Now I bring that up because it's important, because all the banks took a hit. The banks that invest in tech companies took more of a hit. I happened to buy right around this marker. Did I get the super bottom for 11.13? No. Look at this though. Boom. Super dip. Pretty good, right? Market closed out green after all that red. That's crazy. But as you can see, in the past 5 days, Hercules Capital is down 22%. It was 25%. And that is a good purchase, ladies and gentlemen, because in a week or 2 or 4, when the market goes back to normal as far as the FUD around banks, that in theory Hercules Capital and many other companies that are in the tech industry pie will go up to their previous crash rates. Unless, of course, we have continual knife fall from other crashes falling on top of that. Speaking of the tech pie, happy Pie Day.
My people will come if they think we have punch and pack.
So just an example, this is another company, but they don't invest in strictly like tech stuff. And as you can see in the past 5 days, they've only fallen 7%. So that's why that Hercules 25% opportunity was my signal to buy, was the reason to buy. ARK is another company that I have been watching, or Ares Capital Corporation, and that's because they also pay a dividend. Their PE ratio's a little lower at 14.9%. Their dividend yield is good, 10% dividend yield. ARK, or Ares Capital Corporation, was another company that I was going to buy as a possibility for diversifying my portfolio, but considering what had happened with Silverbank and using that opportunity, that 25% dip means there's more of a futuristic upswing for me versus ARK that only offered the 7% dip. So here we are. Again, this is free information on Google Finance, ticker symbol HTGC. You just scroll down the page, look, and here's their financial income statement. Their revenue, $100 million. Net income, $62.5 million. Year-over-year change, which is one of the main things I'm paying attention to. Their revenue's up 38%. Their operating expenses are a little higher, 11%, which is fine. Because look at this net income, 1,584.62% to the good. Their profit margin, 1,119% to the good. Earnings per share, 34% up. And this is EBITDA, which is a business thing. Yep, see? It even tells you. I was going to define it for you, but I don't have to. Thanks, Google. So earnings before interest, taxes, depreciation, and amortization. It's something we use in business world if you ever run your own business or you ever get into like these big LLCs or corporations. You'll live and breathe, or at least your accountants will live and breathe EBITDA. Their EBITDA is up 47%. This, for all intents and purposes, is a profitable business. The people that are running this company, according to these numbers, are doing a really good job. And that's year-over-year change. So, I think this is one of those companies that will do well in the recession. If the recession comes, whether it's a soft landing or a hard landing, I think this is going to be one of the holdings in my portfolio that I'm more happy that I own overall.
It's tech stocks!
All right, we're going to add a holding. HTGC. Hercules Capital? Yes, please. Hey, I just so happened to buy 19. I happened to buy 25.13 shares when it was all said and done. 16 shares. And I got them for $11.92 each. I'm assigning it to my Robinhood portfolio.
My main goal is to blow up and then act like I don't know nobody.
As you can see, my dividend yield went up to 12.5 and my yield on cost went up 12. So, this is just super surface view. And oh look, see, I finally got a financial services. Yay! Unfortunately, all of the other ones I have do this. I wish this is something I wish they'd fix. But here we go, my Hercules Capital, 25 shares, $11.95 is what it's currently at. I got it for $11.92. As you can see, it's my highest dividend yield at 15.73%. And I'm going to get $47 a year annually. Grades or something else that are part of the premium membership. Again, I think I want the premium membership. I just also think I want to get my portfolio above $10,000 first. But I'm not really sure. As you can see, here we are in March. Today is March 14th. Happy Pi Day. And it looks like I just missed the Hercules quarterly payout. Kind of a bummer. But I didn't know when it paid out. And I didn't look either, to be honest with you. I just accepted my 25% dip and smiled about it. I got my mind set on you. Got my mind set. As you can see, the reason I have these stocks are the ones I've chosen is because most of them pay monthly. See? I like monthly income. I like steady monthly income. I've added my first Hercules quarterly income dividend payment. And it's my very first one. And I only did it because of the dip. But the plan is to buy one piece of a quarterly income that pays on the other months. So, for example, Hercules pays in March. Can you guess when it pays again? That's right. It pays in June. Pays in September. Pays in December, right? Hercules pays $3.94 a month or $11.85 a quarter. So I'd like to find something that pays something very similar to that starting in April. So I've got 16 days to find this next dividend paying stock that I can purchase and get that into my portfolio and also add it to my dividend tracker. Well, my beautiful daughter, tune in next time for an episode not surrounded by F.U.D. Love you. Tune in next time for an amazing episode.
Yeah, mission accomplished. That was fun.
Remember, I am not an expert. This is not financial advice. Nothing I can say can be used for you to buy, hold, or sell, or do anything else financial. Do your own research, make your own choices, make your own decisions.